I am investing in gold. So I'm stacking physical gold and I'm buying gold on the stock market. So this video is not sponsored. I just want to share with you what I'm doing and why. So here's an overview of what we're going to discuss in today's video. Why I'm investing in gold, how much that I believe it's going to go up, when I would sell my gold, and the disadvantages of gold. But before we take this any further, I want you to know this about me. So when it comes to investing, I believe in diversification. And honestly, I got to tell you this, when it comes to financial security, gold is the asset that I need to worry the least about. And it gives me, I'd say, the most peace of mind. Okay, now let me tell you the key reasons why I'm investing in gold. So first of all, it gives me protection from inflation. It's also got a proven history, and because of de-dollarization, the central banks are loading up on gold. So we're going to begin with inflation. So you know what? I want to start with this. I want to share with you what my view is on gold. So even though I say that I'm investing in gold, I personally don't view gold as an investment. That's just the way I see it. So financial investing is when you commit your money to something with the expectation of getting a return. So usually it's going to be more money in the future. So if you're going to go by that definition, then I wouldn't classify gold as an investment. I see gold as a store of value. So what I'm essentially saying is that if I purchase gold as a long-term holding, it's not going to make me rich. Like, I'm just trying to keep it real with you. Its purpose is to preserve my wealth. So to be clear, I am not buying gold to try to get rich. I'm buying gold to preserve my wealth from inflation. Now, I want to show you these stats. So if you look at 1980, I mean, believe it or not, the median price home in the US was $70,000. And the average price of gold in that year, 1980, was $614 per troy ounce. So basically, if you had 114 gold coins, that would buy you the median price home in the US. And then if you take a look at right now, 2025, a median price home in the US right now is around $400,000. And the price of gold right now is approximately $3,400 per troy ounce. So basically the math is, if you have 117 gold coins right now, that buys you the median price home in the US. So the purchasing power stays the same. Your wealth is getting preserved. It's being protected from inflation. That's what's going on. Again, I'm not hoping that my gold's going to make me rich. So listen, hypothetically speaking, let's say that you want to buy your child or your grandchild or your nephew or whatever family member a median price home in the future, okay? Like, you're that generous. So let's just say that you want to do that in about 20 years. In 20 years, what's the median priced home going to be in the US in dollars? Like, if you ask me that, I'll tell you that I have no idea. Okay, so why am I saying that? It's because I'm being honest, because inflation may run at 5% one year and then another year might run at 15%. So I don't know. But I'll tell you what. If you accumulate 117 gold coins, then you're going to have enough to buy that median price home for whoever you want in 20 years, or even in 30 years, or even in 40 years. But I want to give you two quick disclaimers because I know some people are going to be very nitpicky about this. So the first one is that, okay, in my examples, it takes about 117 gold coins to buy a median priced home in the US. But of course, yes, there's going to be volatility and price fluctuations. So it may be 140 gold coins to buy the median price home in the US, or maybe 94 gold coins. So it's not going to be perfect. So there's going to be ups and downs depending on a precise point in time. And the second thing is that gold is a store of value if you're holding it for the long run. But if you're talking about trading gold, like buying and selling, now that's a different story, of course, but that's not what this video is about. Now, we're going to move on to another reason why I'm accumulating gold. It's because gold has a proven history. Now, I want to show you the recent track record of gold. So this chart shows the performance of gold when you compare it against the S&P 500, so against the stock markets. If you invested $100 in gold 25 years ago, then you would have done better than investing $100 in the stock market back then. Now, of course, this is just a recent example, but everybody knows that gold has stood the test of time. When people ask, why gold? I would say that a part of the answer is very simple. It's because it's always worked. So listen, when it comes to investing, trust is everything. And gold has earned that trust, not over the years, not just over the decades, but over thousands of years. From the pharaohs of Egypt to the emperors of Rome, civilizations have used gold as wealth for more than 5,000 years. And now it's the central banks. Which brings me to my biggest reason why I'm investing in gold. It's because the central banks are loading up on gold. Central banks, the ones with the money printers, they're not buying crypto. Central banks are not buying silver. Central banks are loading up on gold. So naturally, this adds to demand and it pushes up the price. Okay, you have to remember that central banks can always sell their gold. But for the past 15 years, central banks have been net buyers of gold. And I would say that's no surprise after the GFC. But in 2022, 23, and 24, central banks have significantly increased their gold purchasing. So now, if you look at the purchases by quarters, then you're going to see that Q1 of 2025 was in line with the past 3 years of heavy buying. Now, I want to show you the composition of global reserves. So this is essentially what central banks or governments are holding as their assets. The US dollar is the #1 reserve asset. However, they don't hold actual US dollars like physical cash. These are mostly US treasuries. So dollars, when you see that, it really means US dollar denominated assets. So I've circled this in white for you, and it shows that dollars made up approximately 60% of reserve assets in the early 2000s, and now it's fallen to 46%. So that is a big drop. The second largest reserve asset is now gold, and the third largest reserve asset is the euro. And this one represents a combination of other currencies, which now accounts for 18% of reserve assets. Okay, so what is going on here for the past 2.5 decades? Central banks and governments want to hold fewer dollars, percentage-wise. So if you really see what's happening during this time frame, the euro and gold have actually not seen much change. It's the other currencies that have been gaining. So central banks and governments, they're choosing to diversify their holdings at the expense of the US dollar. But you can make the argument that gold gained ground and then it retreated before. And then you can argue that gold is gaining favor right now, but the same thing could happen again, right? Gold falls out of favor by the central banks. But then again, you can also make the argument that gold is gaining favor and the trend is just going to continue. Now, if you're going to ask me, my honest belief is that this trend of de-dollarization is going to continue because gold is going to be considered a more of a safe haven asset than the US dollar. And I explain all of this in my great melt-up series, so I'm not going to get into that today. Going back to the purchasing activity of central banks, will this large appetite for gold continue? So I'll tell you this, the World Gold Council is the leading authority on gold markets. And according to their most recent survey, 95% of central bank respondents expect global gold reserves to rise over the next 12 months. A record 43% said that they plan to increase their own holdings during that time. Okay, so now I've told you why I'm investing in gold, and we're going to move on to the next topic of discussion. How much is gold going to go up? I think that the better question to ask is how much will the US dollar devalue? Please remember what we discussed. If you have 117 gold coins, you can buy a median price home right now in the US. If you have 117 gold coins, then you can buy a median priced home in the US in 30 years. So how much is gold going to go up? Well, my answer is that it depends on how much money that they're going to print. The more they print, the more gold's going to go up. So you must realize that gold is not going up in value. It's the dollar that's losing value, and that pushes up the price of gold denominated in US dollars. So if you're going to ask me, how much money will the US government, in conjunction with the Federal Reserve, print and devalue the dollar? The best that I can give you is an educated guess, okay? So I understand that the CPI inflation reports, according to the US government, say that inflation runs at about 2 to 3% a year. I think most people believe that that is a wild fairy tale. Anyways, let's assume that inflation runs at 8% a year for the next decade. Then here's the math under that scenario. Then in 10 years, gold would go from the current $3,400 a troy ounce to $7,140. And that would be if gold tracked 8% inflation exactly. So in this scenario, natural volatility could allow it to go for gold to go up to 10,000, right? Just based off the fluctuations. If inflation accelerates faster, then you can expect an even higher price for gold. And we're just talking about inflation. There could be circumstances outside of inflation that could push it higher than 7,140 in this scenario. Like what? Well, I would say there's always the possibility of gold revaluation or an increase in purchasing activity from central banks or institutions or even investors. So maybe you can consider this as your baseline educated guess. Okay, now we're gonna move on to my exit strategy for gold, like when I would sell it. I will sell my gold when the US government learns how to balance their budget. Listen, I'm not trying to be funny. This is not a stand-up comedy channel. I'm being serious. I'll sell my gold when they balance their budget because that way they don't have to print trillions of dollars. Okay, when do I believe that the US government's going to learn how to balance their budgets? I believe that it's going to be after the economic meltdown. If you want timeframes, again, I'm going to have to refer you to my Great Melt-Up series. It will be the system failure and economic crash that forces our country to become fiscally responsible. Now, is there a chance that our country is going to learn fiscal responsibility before disaster strikes? I would say, sure, it's possible, but it's not probable. Like, I don't want to say a 0% chance, so I'll say close to 0% chance. Now, I want to tell you about the disadvantages of gold. So I own physical gold, and I own gold on the stock market. And I want to get the obvious disadvantage out of the way. If you own physical gold, then you have to worry about getting robbed. Like, it sounds so primitive and blunt, but that's the truth. Like, anybody with physical gold is going to tell you the same thing. If not, then they're either not being honest with you or they're just being reckless. So there's a security issue. If you want to store it somewhere, to enhance your security, then you're going to incur storage fees. And if you store it off-site, then they might get robbed. But you can always get insurance, but then you have to pay for insurance. And if it's off-site, then you may have issues with accessibility, especially if SHTF. So I'm telling you, there are certain inconveniences that come along with just owning physical gold, especially if you have a larger quantity. So I'm not saying that it's not worth it. I'm just saying that it comes with the territory. Okay, now, if you own gold on the stock market, then there's always going to be the risk of manipulation or confiscation. So if the government wanted to confiscate your gold again, they wouldn't go knocking door to door. Like, hey, you got any gold? Like, can I confiscate it? No, what the government's going to do, they're just going to target the gold ETFs on the stock markets. So they would just go to their storage vaults and confiscate the gold that's backing the ETF for a lowball, unfair price. Like, it would actually be very convenient for the government. So they would just say it's a matter of national security. So there's always that risk. And as improbable as it might sound right now, it may not be so improbable in the future. Like, especially if the government's collapsing, well, it's going to be desperate times, call for desperate measures. And there's always that risk of robbery from bad actors, and that doesn't exclude the US government. Another disadvantage of gold is that it is not a productive asset. Again, you're not buying gold to get rich, and gold's not going to produce you any income. But personally, I've overcome this disadvantage, like this specific disadvantage, because my gold in the stock market does produce income for me. So what I do is I write covered calls, just way out of the money, and what I make, it actually beats the interest rates that the banks are offering while my asset is appreciating in price. So these are some of the disadvantages. There's not going to be a perfect asset that's got no downside or issues to it. But this is what I'm exposed to as a owner of gold, but I've learned to overcome them. So to me, it's like, no big deal, whatever. And I also want to answer this question. So which is better, physical gold or gold on the stock markets? They're each going to have their pros and cons. And I can go so in depth about this. I could dedicate a separate video to this one. But personally, I own both physical gold and gold on the stock markets. If you want to buy gold on the stock market, the ticker symbol is GLD. But here's my warning to you. If you want to buy gold on the stock market, just buy gold, like GLD. Don't try to buy gold mining companies. If you're like an expert in gold mining operations and you have experience analyzing financials and operations and geopolitics, then go ahead and invest in gold mining stocks and try to pick a winner. But if you don't know what you're doing, just buy gold, not gold mining companies on the stock markets. Because this is what can happen. If the price of gold shoots up and your gold mining company runs a bad operation, the stock price can go down, even though gold is going up, and then you'd feel so bad. So don't say I didn't warn you. Okay, so what have you learned today? You probably learned that I like gold, and I gave you my reasons why. But I'll tell you this, it's very important. Please do not go all in on gold. Like I have not. Again, you want to stay diversified. I like gold a lot, but diversification is key. That's all for today. Please subscribe. I thank you for the support, and I wish you a very nice day. Take care.